Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. Today is September 12th, 2018, and I'm going to take a look at gold here today, the ETF being GLD. Now, it's not listed here, but another ETF that you could look at if you wanted to be on the long side and have a little bit of leverage to it would be the UGL. I'll have to put something up on the site that shows some of the other alternative, more leveraged ETFs. So for those of you that are not interested in the future side, they're interested obviously in the ETFs, gold is obviously one that we're going to be talking about tonight, specifically on the long side. Now, the trend is to the downside, short, intermediate, and long-term, all point to the downside. But as I've mentioned many times before, the technical rating is flat, and that usually is an indication that the market is basing and starting to show signs of life as far as trend reversal. Now, a lot of momentum indicators have already started to flip around, but the trends are slow. That's just the way that they are, and the technical ratings will typically give you an indication as to what's taking place. You can see the same thing taking place here with copper as well. But bottom line is that there's nothing that's showing up with the traditional overbought, oversold indicators, and part of the reason for that is that gold, here's our Deep Dive Pro Alerts, is that we're in a sideways consolidation. What we have is a lazy day indicator. Let me show you what that looks like so you can get a feel for what's taking place here. Easiest way to do that is to show it this way. So here's daily bars for gold, and you see this blue area today being yellow, and you can see the 16 that's prompting this. So the yellow bar just simply signifies today, and what we're looking at is these blue bars are telling us that the market has not gotten overbought or oversold in a traditional sense, using a lot of different types of momentum type indicators in 16 days. And whenever you get that kind of a condition, you can see one through here. This was at 15. When you get into that particular phase, usually big things happen. It doesn't tell us which direction it's going to head. It just simply tells us that it's been winding up and is probably due for some type of volatile move. We had another one that was through here and it broke out to the upside, another 15 there. So it just simply gives you an idea. So anytime flipping back to the website, you look under this column here for the Pro Alerts, and you see some type of a lazy day indicator. It just simply means that the market in itself, from a momentum perspective, not pricing action, but momentum, it really hasn't gotten overbought or oversold, and that is simply an indication that the market is probably due for some type of a bounce. So flipping back to the web, or to the charts here, you can see that here's gold daily bars, different chart. You can see that we had a nice little move to the upside today, and what we're looking at right now is resistance at the 50-day moving average. So that's all you have to look at. This yellow line is the 50-day. It just happens to be coinciding with our closest level of resistance on daily bars. Just happens to coincide with that. So we're a little ways away from that. But if we're actually able to break above the lows or the highs that were set, which is essentially where we are right now, we're close to it, and we're able to break above this 50-day moving average, then a new trend, I think, is going to start to emerge here. The trend had been to the downside, still is, according to the deep dive. But in looking at how things are starting to move here, we might be able to see a little bit of a breakout to the upside. Now the systems are actually long right now, but I want to show one other chart here before we move on, and basically point out that we're in an energy level, or excuse me, an energy phase, not a level, because the energy level is a different indicator that we have, but an energy zone is essentially this. This low right through here on weekly bars is essentially where the market is finding a little bit of resistance. It's basically at that level right now. If we look at the low side, so if you go all the way across, we're at the high level right there. This low level right through there If you scroll that all the way across, you see basically this closing value there. So right now we're at the upper end of a channel, if you will, an energy zone. And whenever we get this kind of an energy zone where the market on weekly bars comes down, breaks above, basically zigzags back and forth, the longer that goes on, the more explosive of move that we're going to be looking at. I think it's more pronounced on the daily bars, hence the reason I spent some time on the lazy bar. But I just want to point out that we're very close. If we look at this level right through here, 1410.60, is that right? No, excuse me, 1207.90. That's what this level is right through here. So we're almost there right now. And unfortunately, we're looking at a condition where the market is basically in that zone, and we'd be expecting some type of a pop to the market. Now, it could pop above and then go back into a consolidation and sort of work this consolidation period out a little bit further. But there is that possibility that the market really could start to bounce here to the upside. And so from that perspective, it bodes well for our positions. So this will give you a snapshot of the sector as a whole for the metal sector, where we're long gold, copper, and platinum. Got nice little open position profits in each one of them, but gold has 4 systems that are actually long right now. Got 2 that are in long on copper, and we got 3 that are long in platinum. So as a whole, we're seeing some synergy across other markets within the sector, and I would anticipate that with volatility associated with this, that we could start to see a nice little upside potential here. So besides the if we come back here to our ETFs, besides GLD, the other one that I was mentioning is UGL, and that's a 2X ETF, something that you might want to look at. I think that the volatility that we're going to see is going to start to pick up, and I think that there's going to probably be a little more consolidation, but longer term, and I'm talking weeks, not months and years, but longer term for us, that there's some really good potential here with gold. So with that, watch over gold. Let's see what does take place. Watch over the systems, and we'll see if we can increase our profitability. The other thing I'm going to point out is that it's taken us a while, but we're now able to offer an annual subscription to our service, specifically the premium service. So if you went to join today. I haven't added this to the website, but we will here shortly. Just realize that as of right now, that if you want an annual subscription to our service, that is available to you. All you need to do is come to that particular page, join-today/ and that you'll come to this particular page. As I mentioned, we'll put it up on the menu system here probably this evening. But when you come to this particular page, you can come to the savings, and what we'll do is out of a year, we'll give you 3 months. So we're giving you 25% savings. So we're just trying to encourage people that if you do want a longer term subscription, don't want to have to do the monthly type thing and save some money, that you're looking at a pretty good savings here. So with that, I just want to at least point out that we're trying to improve the service and trying to save our customers some long-term monies, as well as continue to look at different markets. Gold, obviously, tonight. So from that perspective, if you have questions, email us. And if you're interested in the annual subscription, we'll be posting something onto the menu system here, hopefully here fairly soon, and put you in a position to save some money and take advantage of our analyses. So thanks again, and we'll take a look at another market tomorrow.